Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Tuesday 1st of April. I'm recording the video 6:15 PM Eastern Standard Time. For the last 4 weeks I've really been struggling with the S&P, and today I think finally I've found out why. I expect we are going to see one more day of upward movement. I have a short-term target 1890 to 1891, and after that I am still expecting a trend change at minor degree and 3 or 4 weeks of overall downward movement to find support at the lower of the double aqua blue trend lines. I'll explain why I'm still expecting that on the daily chart. The difference between the bullish and bearish wave counts is explained fully in the historic analysis. They both expect that the S&P is still within an intermediate degree correction, subdividing as an expanded flat, 3 almost complete. We still need 5 down. There are a few reasons why I'm not going to have an alternate which expects intermediate wave 2 is over here. First of all, it would not have breached this dark blue parallel channel, which is drawn using Elliott's technique around intermediate wave 1. Second waves almost always breach the channel containing the prior first wave movement, so that would be very unusual for it to have not done that. It would also be a remarkably brief second wave correction for intermediate degree, so it's more likely that it's not over there. If we did try and label it over here, this would be the start of a third wave, which may only subdivide as an impulse. We would be labelling the beginning of it 1, 2, 1, 2, 1, 2. You couldn't label this as a second wave because you can't have a triangle in a second wave position, so it would have to be a series of overlapping first and second waves. There are quite a few problems with that idea. We would have a second wave here and here, both of them breaching the prior base channel containing the first and second wave before them 1 degree higher. That's extremely unlikely that 2 second waves in a row would do that. We'd also have to see this upward movement as a 5-wave structure, and it quite simply does not subdivide as a 5. This is a 3. So for all those reasons I expect that what we've had here is a barrier triangle unfolding over the last 4 weeks, and it ended 3 days ago, and that's the reason for all of that choppy, overlapping sideways movement. Now it's over, the structure is clear, and I expect that's why I was having such difficulty with the S&P. I expect that minor wave B is an incomplete zigzag, subdividing 5, barrier triangle for the 3, and we need a complete 5 up. The structure is incomplete, and it may end tomorrow. At 1891, minute wave C would reach equality in length with the widest part of the triangle. At 1890, there's a target based on the ratios within the waves at the hourly chart level, so we have a 1-point target zone for more upwards movement, which should be met tomorrow. When we see a barrier triangle unfold, the following movement out of it is usually sharp and brief, or if it's a 5th wave, sometimes it can be a long extension. In this case, I expect it will be sharp and brief. Let's have a look at the structure of this barrier triangle on the hourly chart, where it begins here, this point here. 4 of the 5 subwaves of a triangle must be zigzags or zigzag combinations. So 1 of the 5 subwaves of a triangle may be a different corrective structure. We may have had an expanded flat correction here for the A wave of the triangle. Slightly unusual, but the subdivisions fit perfectly, and it certainly meets the rules for a triangle. We have a zigzag for B and C and D, and a double zigzag for E, with deeper percentage retracements and slightly longer lasting. This structure meets all of the rules for a barrier triangle and has a pretty typical look, and it's over here. The E wave slightly overshoots the AC trend line, which is somewhat common. It's more common for it to undershoot, but if it doesn't, then it often overshoots. So this is where we have a triangle complete, and that perfectly explains all that choppy, overlapping sideways movement. The only problem with it, and something I'm going to have to revise, is that MACD doesn't hover nicely around the 0 line. Often when triangles unfold, that's how MACD behaves. It hasn't quite behaved in that way this time, and that's what was putting me off about the triangle. But now it's complete and we have a new high above this point, it's pretty obviously a triangle. So I'm expecting a little bit more upwards movement to complete the structure for minute wave C. At 1891, this fifth wave here would reach 0.618, the length of the third wave. There's no Fibonacci ratio between minuet waves 1 and 3, so I will expect to see a ratio for this fifth wave. It looks like it's extending, and that's typical, again, following a barrier triangle in a fourth wave position. The fifth wave is either a brief, sharp, rapid movement, or it's an extension, and this one is extending. Use Elliott's technique to draw a channel around this upward movement from 1 to 3 with a copy on 2. When we see this small channel very clearly and strongly breached with downward movement, that will be the earliest possible indication that minor wave B is finally over and minor wave C down is finally underway. At 1894, minor wave B in its entirety will reach 138% the length of minor wave A. That's the maximum common length of a B wave within a flat correction, so the probability is that upward movement will end before this price point. At the daily chart level, the bearish alternate is exactly the same and it doesn't diverge from the bullish wave count, and it won't diverge probably for a few months yet. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.